Welcome everybody, it's Francis, the Market Sniper, your update on precious metals on a Monday. Okay, I'm going to start with the silver chart. Gold is obviously the key driver, but nonetheless, we'll be jumping between the two and I'll be showing you on the macro time frame, and we're going to drill it down the time frames and getting to a point where we may be suggesting basing price behavior may already potentially be in play for the next legs up. Of course, we're hearing about more liquidity suddenly being needed, and we may eventually get an outcome that sees the precious metals advance further forward and upward as a result of that. This is your 3-monthly silver chart with the HVF draw and the $333 target, which will be the first in a new trend, which means it will actually overperform that on all the balance of probabilities, whilst possibly having a bit of a rest at those levels. It's also told you before, and we've covered this before, that around the 90 levels you'll probably rest. You may technically run the 100 and pull back, so that could be something like that, for example, and then a winding up period over here before we go even higher. This is going to be a big debasement fiat part of the trade. Of course, that's already begun. It already triggered. You know that from the $30 move that started there, that's run our first target. Now, this could have pulled back to the first interim. It could have even pulled back all the way to the funnel and still been a very legitimate, and it may still do that if we were to have a chronic demand destroying event. But the overall journey path is up here for the 90s before running the 333s for silver. And that is not the end, but the beginning of a bottoming. Now let's just show you the master of it all, the gold, on a similar time frame, just so that you can see why you might have had a little bit of a rest. People just want things that go up all the time. All the time doesn't happen. There you can see gold, how disproportionately quickly it has been going up, and this is all the fuss. That's the top callers right there in that tiny little pink circle. Yep, you will also have noted that you kind of have the potential for a little bit of a cup and handle there. I'm not a massive fan of that framing. It is a traditional technical analysis draw. There you go. That was at the 2K. We gave you that once, twice, 3 times, and 4th time wind up a lady that gave you this big upside move. So that's the history that you have to bear in mind. This is your fiat and debt debasement, and it is accelerating. It's going to be in an accelerating phase, and we discuss why this is the epoch for gold and silver and other things like platinum and miners that will outperform. There is no more legitimate basis of account. Gold is your new basis of account, divided in gold ounces. This will overperform gold for a period at a certain time, still to come, but that may in fact take place. Gold-silver ratio will determine that. You can support our bullion dealers below, Pure Gold below. Don't forget also our trading platforms. If you want to accelerate your building of ounces in silver and gold, that's what you want to do. Then book a link and have yourself a call. Real HVFs, real setups, real technical analysis done on lower time frames. So I'm going to transition. Look at that phrase he threw in there. I'm going to move from this macro time frame and I'm going to go to the lower time frames to talk to you more about what's happened recently. We need to reframe that, rescale that, and talk about it. You see, the liquidity discussion started to come in the frame. We were still open to the possibility that you might have 3 waves of selling. We had an inverted HVF in there that was continuation to the downside. Its target got made. You had a double top. That target got made. All great exits for the subsequent rallies. These were great exits and then bounce back up. But we've actually broken to the upside, contrary to the possible expectation. Short-term continuation. We never short in the macro bulls. We don't do it. We don't try to take both ways. It's confusing. You retain one bias. Yes, it's bearish on a short time frame, but the tide, or let's rather say, the flow of the stream is from the mountain to the sea. We don't spend too much time trying to make money swimming upstream. No, sir. No, sir. 3 bags full, sir. While a couple of eddies may actually have a quiet spell where they can circulate backwards, on the long run you are playing a loser's game. And as a result, we don't take the shorts to the short side. This is broken up nicely. Let's show you some of those draws that we've done. We're also showing that corrections are normal in those legacy arrows there. That was the inverted HVF. This is what's happened. There is actually an upside here that we were watching and talking in the community, both on our live trading day, which was just past. In fact, I'm going to move that to 2 hours now that we're dropping time frames, and grab that low. This is your draw of the upside HVF, and you're close to target. We took that trade, by the way, on our tick mill broker. I'm showing you on Awanda. Awanda has a lot more history way back then, and you too can trade with our brokers through tick mill. BTCC, yes, the first and original crypto platform that actually trades commodities, FX, and everything else. SimpleFX. All those links are below. All those links are below in the YouTube channel. And you can use them. No KYC on BTCC. So, yep, you can indeed do just fine with that. Okay, that's the double top. Let's just cover what happened. That was the double top. You were going up so strong. Dip buyers on any slap in the face. Slap in the face is a warning. That's a warning, and it's quite broad. But the buy the dippers brought it back up to the same level. You got your M head there. That was your double top. There's that target take over there. That was gold trading. The inverted HVF is in there. What the hell? I'll draw it for you. Why don't we draw it? Draw everything. Draw everything. Show them the value of HVF method. Yes, sir. Yes, sir. 3 bags full. I will do exactly that. That's the localized RH3. So now it's getting a bit busy in here. Let's show you. Let's show you. Let's pull it through. Let's pull it through so that you can work it all out with me. Now, again, we draw it. We don't trade it because it's a bear call. So there is the final entry short. That's where you would have put your stop loss, quite far away, fat funnel, not that interesting, but you got continuation there at the key round number of 4,000. See the round number, the blue line, that's it. A little bit of chop and churn. You made that downside target, just like you made the M head double top downside target had you traded it short. But the problem you have is suddenly the short patterns are going to stop working and they're going to go potentially strongly in the opposite direction. Whilst we were open, that's your sell leg, big sell leg. Whilst we were open to a second sell leg and then a possible third, it could even be encapsulated in that, and you are actually in a basing, squeezing, lower volatility, and you broke upside. You broke upside. The minute our alert started to trigger, we go, okay, it's an upside break. We took some entries there, and it's about to make our target on the upside HVFs on our designated brokers of Tickmill, SimpleFX, all in the links below, BTCC, and Scandinavian Capital Markets that do the USD Korean won as well. So there's been good opportunities in all of that. Up, up, up she goes, up, up, up she goes, and you're almost home. So what's the interesting bit? That's what happened. What happens next, you might ask? Well, the truth is nobody can tell you about the future with any certainty, but they can do on balance or probability assessments if they are technical and have decent skills in the technical realm. So our overall assessment is that you might put a nose above the red line there. Let's just get that alert to disappear. Thank you very much. Go away. And you will technically then have a potential neckline, a neckline to a good thing. However, let's put it on while you're watching. The potential neckline to the good thing will, of course, be in and around, I would say, the 4135 mark. So we'll put a blue line, light blue, fatten him up just to confuse the world, 4135 as a runner on the left shoulder. That's the one on this side. You'll see that it's typically just been run by those 3 highs. So we're choosing a logical round number that has just been run. You've even had smaller events there and there and there where it ran. You had a little bounce over here after there. Quite clearly, that is a potential left shoulder with the 4135 as a neckline. Get out the way, the U there, sir. The light blue. And what are we doing? We've got a target, an HVF target for here, and you typically have a little bit of overperformance. So we can come here and then have a little bit of a pullback. This will represent, for the longs, potentially on limit orders, great entry trades somewhere around here. That looks like the 4075 to 4050 level. That could be an accumulate phase. Why? Cause right shoulder. Cause upside if we get there. The fact that we'd get back to this price range no longer makes this short term such a convincing third sell-off argument. It looks more like basing and a turn. Yep. And by the way, you did also on this triggering entry to the short side end up providing an amazing neckline for a kind of double bottom, a kind of W bottom. So you had an M top and a W bottom. You see it right there. Now you're getting a complex head and shoulder with a neckline, inverted head and shoulder, let me say, left shoulder over here. You've got a W bottom for a head, and you've got a prediction of progress decay. That's what happens after you run a level. So you run these levels and you go a little bit soft. That's perfect to bring you to the right shoulder level. It would be a bit of a deep right shoulder if it came all the way back to this neckline, which is the green for go. That was the original inverted HVF, the RL3 here. We can get you that price point. I don't think it comes that low, but it might. It's around 4,040. So we said 4,075 to the 450, 4,050. Maybe you'll do a 4,040. That will bring you to this point. You can see here, again, potential price behavior interaction. That was a triggering event level. You can see the candles. Let's remove our artwork. You can see it there, you can see it there, and then you broke with momentum, strong and then slightly more gradiated. It was a pivot in the inflection, strong up, nearly vertical, then a more like a kind of 50-degree angle to the upside. So you can see these key inflection points as well. Interesting. What does the W give you as a target, as well as the head and shoulders give you as a target? That's what you're asking. You're asking about the future, not the past. I get that. That's what we're getting to. But I need all who listen to understand how we get there. So that's why we draw what we draw, to understand charts. It matters. The more you put in, the more you get out, the more wisdom and the more you learn, the more time you spend in this industry. Eventually, over time, the more competence you build. That's what it's all about. Competence on building probability-based possibilities that could see you benefit from a little bit of price upside. And that's where we are on gold. Price upside is now the thing. No one's shilling. No one's excited about gold right now. But the liquidity is coming, so that's your inverted head and shoulder potential target, which would take you just past the previous highs, were we to use the 4135, this blue line. It might not get there. It might only come to exactly the target and make the target. It's almost there already at 4118. It might go part of the way to 41225. We might be pulling it back. That's okay. Adjusting is fine. We don't know the exact details. If I were a guessing man, that's where I'm putting it. 4135 to start. So that's interesting. Interesting indeed. What about this line if we take it back down to just the W bottom, which was the beginning of a bit of a bottoming process? We had observed that as well. That's why we were watching gold. We said, hey, a W is broken. We knew that. In fact, this triggering event bar was already in a squeezy on a smaller time frame like this. We actually were trading on live trading day when gold started to move at the end, that wick that came back. We were watching that. That was the first test. It's called a break and feign back in. What happens next? The real break happens next. That's what happens next. We teach you about that. Click the link below and you'll learn and watch us implement it together as well in the community. So this brings you back up the W bottom, which gives you some interim levels where you might pause. The green W neckline over there brings you back up on gold to around these levels. And that is unsurprising because, as you can see, there's a purple line, a pink, let's try again. There's a light blue line in double thick there. That was the M top neckline that you broke with momentum. So what was support for the M can become resistance. So in the journey back up, if we do, this would be my prediction of the future price behavior. Hey, we're trying to do something difficult here, and it can be wrong, but we're trying to be informative too. It could look very much like this. So how do we go? You make this target, you blow off, you just clear the red. You have some form of a downward right shoulder that maybe supports on the second interim level of this squeezy Japanesey, oh so good HVF to the upside. You come back up and you trigger and break. You could have a really impulsive candle on the break, and you could even do some form of a return move and have a bit of volatility before you calm down at these levels, the 4,200 and the 4,206. Very close to each other, likely to be run simultaneously. Before running and heading back up and making a marginally higher high. I'd prefer we didn't make a marginally higher high. Maybe these necklines will be a tiny bit lower so that you just get up to the similar levels where you might have a rest. However, at the moment, the way we've done it, it points to 4,400, which is a tiny bit higher than the highs here. The high there was 4,381. However, if that neckline gets adjusted closer to the target of the HVF and down, we may just come and rest here. This is not melt up, go straight to new highs type price behavior. This is working its way back up. This points to a rest round about this boxy region, I think. Points to a likely rest here. So we're going to include that target in there in the boxy region. Points to a rest, and then you might get some comeback down. This isn't ripping. It isn't face melting. It's working its way up. Yes, on a lower time frame, that's quite an exciting candle, and that's decent, consistent climbing. But it's not face melt. It's not a face melt. Face melt might point to a run of the new highs strongly. I think we get a bit of a pause there, and then we come off again. We come off a little bit again, but we're going to wind up. Maybe we'll do a shorter time frame version of what happened in September from April. April to September, we wound up for a better part of 6 months, is it? 4 months to 9 months, kind of end of 9 months it broke. It sort of was almost a 6 month story. And that was quite a lengthy one. I don't think this has got the same length to it. It will come around a lot quicker, and you might have a Christmas breakout. So what could we have? Let's go back up the time frames, and we can slowly remove all our jaws there. We did all those HVF jaws for you. What you could have is something like this. Let's go to 8 months. 8 months, 8 hours, 12 hours, let's go 12 hours. What you could end up having is a bigger version than what the fractal at $2,011, or a smaller version of the April to September. A little bit of a rest, a wind up, who knows, calming down, and we could get ready to go again. Now, not every time is it a continuation pattern exactly like that, but it often gives you similar structure: compression, volatility, liquidity release, melt up. And that will be on a Fed notice or on a non-farm payrolls day, key pivot days that we get to recognize and take. That's right. Key pivot days that we get to recognize and take, very similar to, if we go back out to the 10 days, that which you experienced in the Northern Hemisphere tail end of the summer, right here. That's right here. Let's remind you of it. Let's also take all the pullbacks out of the frame. You got a very lengthy, and you got an extension to the structure with an M complex. It started a fake run there. It tricked us in again early one more time. You're never going to perfectly execute. It's more important not to miss it. And we got flushed out and back in again, made that run, came back down. That was our perfect entry. It was incredibly profitable for us, and we then watched it go, 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 and go. And boy, did it go great. That is the structure. This was your Trump panic, his tantrum tariff shenanigans that shot you up from below 2,950 to 3,500. So that gave you the final blow off to a call that we'd said would be 2,900, 3,000 when it was down at 2,000. So we've been bang on the gold. We continue to look at the big time frames. On the shorter time frame, you can't always tell, but this is a robust move. Now, even on the daily, it's a strong day that you've had. You might get a little bit of pause, like we say, to suggest that right shoulder, and then you go higher. If it is significantly stronger and just has one spinning top and continues to surge, we might have to review. Technical analysis is always subject to review. Some things gain momentum and some things dissipate momentum. If you just had a very small little thinking candle, let's say a spinning top, and then you surge really firmly, it could be you blow off the top highs. That is how we would change our bullishness from wind up bullish to new all-time highs and surge bullish. And how do we accept we're wrong? Well, a nasty reversal where you run the RL3 of the HVF that we gave you, the squeezy Japanesey, invalidates the bullishness and would mean that we would revert back to there's still the third wave of selling to go. This would have to be shooting starred. It's not looking very likely. I'd give that a 5, maybe 10% maximum probability out of slowly up versus fast up, and maybe winding up to get higher. So one of two things: this is going to be a localized high and we'll rest again, or the super fast bull will take over and they will see momentum climb. We don't want to go too face rippingly up, because you tend, when you go up too quickly, to get into a blow off situation, which then sees another smackdown. However, it's worth pointing out those blow off situations that look blow offy had one strong day, one average day, one strong day, one average day, one average day, stronger day, real strong day, more average day, down day, strong day, in betweeners, down, a little bit up, a little bit down, a little bit up, rest, average day, low day, down day, stronger. You can see how it works. So as long as you're mixing in a little bit of moderation. This was almost too quick, from here to there and from there to the absolute highs. It was accelerating. A slapdown was invariably. People were buying just to hit the stack, not even asking what the price was. And it'll happen again, and it's going to continue to happen all the way up to crazy numbers. So entering at a localized high with leverage will destroy you financially. Without method, do not leverage trade. Without dispassionate adherence to process, do not leverage trade. Without sizing and knowing what your loss is, do not trade. If you wish to trade and accelerate, turbocharge your stacking, then hit the link below and become part of a community that's doing it moderately, lightly with leverage, to build a turbo stack, which it gets converted back into Blue Pot, the unleveraged investment variety that sees you have more of these. More bricks, please. More bricks, do your weights, more bricks, please. So what about the other two? Let's take it down to silver on the low level. We did silver on the macro, and we'll do a run past platinum as well. What about them? Let's have a look. G, silver. And on the same time frame, nice and perky from the silver. In fact, it's already gone past its... And I would say silver is due. It's due for that silver ratio to start flipping. Let's go down. This is very strong from silver, I would say. And you're getting to, it's a slightly chunkier. Again, I will draw this. Let's see if we did. We might have already done it on this broker. There you go. A little bit of a neckline here. Again, complex right shoulder, left shoulder. Final capitulation head made the 46. Breakout on the neckline, very clear, and making it already to the next neckline. By the way, that's a $50 price for silver. Hello, you're back in the 50s for silver. Please pay attention. There was the head and shoulder that was called and drawn. We saw this break with momentum. We had a feeling that you would then have to run that low, which you did. Nice there is an inverted HVF in there, believe it or not, and that gave you the low of that wick too in that left shoulder. But now it's about upside, and silver is moving briskly and is back in the 50s. Congratulations, back in the 50s. That makes that worth quite some muchos dineros. 50 times 100 ounces, that's okay. And you can stack many more of those. They stack nicely on top of each other. It's like Lego for adults. You know, it's like, it's not too difficult, a Lego program, I have to say. It's not going to be super intellectually challenging, but it's kind of satisfying. Clink, clink, clink. Yep, you can do it. Use our friends. Pure gold below. Use Bullionvault for stacking internet gold, especially if you're considering a move. It's fully backed. It's not hypothecated. You could technically have a deliverer. It's just kind of expensive. You can reserve specific bars with numbers. My personal suggestion, don't add to your cost at all. Have internet gold there. And if you're moving, you're changing borders, you sell and you buy physical locally where you are moving to. That is it. That's the silver, looking good. Nice, strong move back into the 50s. Yeah, we like that. Starting with a 5. Now, it hasn't had many days, weeks, or years in the 50s. It's going to have way more nowadays, in our opinion, and numbers even bigger than that still to come. So we told you that platinum hadn't really sold off near as much and it was showing pretty rigid strength. Now, again, I'd expect this beast to move. It made its target. That's also why we kind of expected precious metals could have a rest. It's important to highlight this. We went up to the high time frames on both gold and silver. So let me first, before I deal with the 4-hour, go to the monthly time frames here. You will recall this winding up structure. Let's go and stick our draw tool indicator, which you too will get after passing your tests in the community and doing your draws manually. You too will get. That was a target make, guys. That was a target make at 1617. There's your wick and your rest, and now you're winding up. Liquidity is back. You don't rest for long. You keep getting given steroids, oxygen, compressed oxygen, booster bars, and everything else. This is a runner. It stays a runner. It doesn't need long rests. It's getting chemically enhanced to trot and trot and trot. Why? Because they can't stop debasing. They can't stop debasing. Too much fiat, too much debt, too much destruction of your money, too much impoverishment that they're trying to inflict on you. And your method of protecting yourself from their behavior is to do exactly as indicated, to reduce it. So that is the target run there. That's why it was due a rest. Metals got a rest after platinum made its target. And of course, they'd had a bit of a surge in height in a very short time. All of it coincides beautifully, geometrically. You see how when you get little pieces of the puzzle, you know, okay, we're not going to go wailing in too big with the leverage. Lots of other people were just getting with the X FOMO and charging in near the tops, got washed out. Why? No stop losses, or if they had stop losses not properly sized, took too much of their account, etc., etc. No indication that there was a point of rest that needed to be made, that had just been made by one metal. What goes for one metal in a correlated space that requires mining and something very precious being found goes for them all, etc., etc. Fast movement, platinum target, lots of reasons why we needed that rest. And we could well be done with it. Back down to that 4-hour level so that you understand the gift that HVF method gives you. There's the 1600. You're forming a winding up structure at the 1600 on platinum metals, friends. Oh, I held platinum maples in my hand for the first time. The most beautiful, shiny white metal I've ever seen. Yep, silver is beautiful. These were amazing. They were amazing. They're hard. They don't tarnish. This is cheap gold. Cheap gold. That's right. End of story. To me, cheap gold. You want to buy cheap gold? Hard to get, I get it. You can buy platinum miners as well. By the way, we'll do a couple of miners in here just for fun to give you a treat. But this is going to go up broadly for me if you have the patience and the understanding of where you'd put a stop. You could potentially put a stop over here. You could get in on this nice little pullback that's coming on a limit order, maybe a bit lower, somewhere between there. And you can wait for your first, your second, and your falling wedge into a low here that has triggered and is doing a nice little return move for you. And you will get that 3 when you run the 16 level, maybe a little bit downward action. And you are going to see upside on platinum. A new high will be coming since the post CV19 era. By the way, platinum's been 3,000 long before gold ever was 3,000, in case you didn't know, and upper 2,000s long before gold had even cleared 1,000. It's a far more rare mineral, and it is grossly underpriced. So is silver, but it's even more underpriced than silver. It is rarer. If you go by scarcity, it is rarer. That's right. There's only 16.6. There's only 1 ounce for every 16.67 ounces of gold, my friends. Yep, bear that in mind. Bear that in mind. Let's pretend that's a localized high. We'll do the draw for you. Let's speculate. By the way, you can speculate to accumulate with our draw tool. That's allowed for a very deep pullback. I would expect it not to go that far. I think you'll get a higher risk reward ratio. There's lots of things we can adjust here. 5, I think that'll be 4, 5. Yeah, let's do that. get that a little bit higher. I also think we'll make a higher RH3, but on a very conservative draw, you'll be going through the 1800 mark on platinum. $1,800 on platinum, very cheap still, even at 1800. That's your update on gold, silver, and platinum. Let's have a look at one or two shares and then we'll let you go. So we have got calls and shares and everything on this one. Yep, Hecla is super cheap. There was someone showing that on forward earnings, I don't think that holds right now after its last earnings. This was unbelievable earnings, by the way, and everybody faded them and sold them off initially as they were released. Hecla is going to, I mean, all the miners, I haven't got a bearish thing to say about any of them. If they've survived the long grey winter, they are going to flourish now. Cash flow positive. Oh boy. So let's just remind some people some of the crazy things we've said. By the way, that was our primer before previous results that saw a massive gap. And then you got another set of results that saw a massive gap up. People don't understand how cash generative and what an awesome business mining is now that you're a lean, mean fighting machine, and that there is very little going on in the exploration space, and now everybody wants ounces and everybody's interested in you, having paid no attention for absolute years, decades. Now everybody wants to know all about your business. Isn't that ironic? You go out of favor for such a long time, and then you come back with a bang. Let's show you that macro HVF that sees us be so bullish. We might want a higher time frame. Nope, that seemed to have worked. So first of all, the daily. Ooh, there's a bigger one in all of this. Let's just go up to the weekly. We got to go weekly on all of this. We got to go weekly. Ta-da. No, that's still not the one. Let's go monthly. He's running the gambit. Oh dear. First setup in a new trend, by the way, my good friends, my precious metals friends, the ladies and gentlemen of the Ministry of Precious Metals. So this is your upside structure. We've shown you this at the point of the results. This will be the most obscene, 565 Rs. That was done at the previous results, not the ones that just recently passed, the previous results that had a beautiful HVF primer. Buying the options we did, straight away move. Buying out of money options that have already become in the money, and we took long dates all the way to 2028, January of 2028. There are leaps. They are known as leaps. They are long calls. My, oh my, those things are going to end up deep in the money with tons of time left to sell at significantly higher prices. So the 84 call is the first resting place of major significance. You do, of course, have a second interim at 61, which is not a million miles off, but they look close. But believe you me, there's still $15 between them. Is it 15 or is it 25? It's 23. Nowhere close. 23.75. Maths. I'm struggling this time of day. $23 doesn't look like a lot, but it is. You're down at 9. I'm in log scale here, friends. Hecla is an absolute beast that will go significantly higher. Gold and silver miners generally are going to go higher. We have our best, but this in terms of growth, a forward PE at 1.2, not that long ago. Now I think it'll need updating after that last set of earnings, but that is still garbage. Think about Nvidia. Think about Oracle. That's actually on I think it's on a 500 PE with a whole Ponzi scam of Zionists. Buying chips for data centers they haven't yet built, and various other, committing to buy chips and committing to provide data centers to ChatGPT, Sam Altman. There's just a Zio fest of corruption and fraud, of circle jerk of funds. And then you sit with the real mining money, cash flow with a 2. Wow. I mean, it's just this is a resting point. $85, 84.75. It's a resting point. By the way, you want to see that. If you think that's not a ballsy call, it all looks so close and easy. Let's just de-log that for you. and put it all on the same chart that you can see the targeted call we are making. Yeah, you're starting to get a feeling here, aren't you? That's the Hecla call we've made. You're sitting here, and by the way, it was made before that triggering event. It was made right down on the primer. That is your call. That is your call for upside. That is your call for upside on the silver mining stock. Don't expect it tomorrow. That's the difference between 61 and 84.75 in a normal, regular geometric chart. That is it. You want to find out about those other miners, click the link below. See which ones we are liking. Mining's a great space at the moment. I think it does very well. When to enter, how to enter, what are we looking at, what are those targets? That is huge. 84. I mean, you could have bought at our first interim. First interim is around $17.91, $18 strikes. You would have a bit of churn and chuck around there before absolutely ripping into the next. The only thing you need to make sure is you've allowed enough time. By the way, these things will face melt, rip. They just aren't stumbling on this stuff as easily anymore. It weighs 100 ounces. It's hard to get this much of pure 4.9 silver. It isn't lying around, sloping around in rocks on mammoth chunks like it used to. Most of the easy silver has been found. Most of the easy gold has been found. Platinum is almost impossible to find. It's South Africa and Russia. It's time, friends. The precious metals will pay. The miners will pay more. Silver and platinum will outpay gold at some point, for which I have yet to do the gold-silver ratio. But let's save that for a video in the future. We've done the Hecla, we've done a mining stock. There are others. Click the link below to find out more. Book a call. You too can turbo stack big ass ounce blocks of platinum, silver, and metals and positions in equities, providing you can secure your certificates so that you too can ensure that reset season will see you in a strong stead. Till next time, I'll catch you later. Thanks for watching. Apologies for the stream that failed, by the way. We are getting a second internet. Despite having 100 bits in both directions, it seems to cut out when we tax it with a stream. We will ensure that we are getting that sorted and we'll get a second provider to back us up. Until next time, hit the likes. We're almost through 100,000. Share to one friend. If you really appreciate what we've been doing, share us to one friend. Get us home through the 100K. It's a journey that started in 2009. We are tail end of 2025. Can we get it done before Christmas? A Christmas present to Sniper. Share to one friend. Say, you need to hear this guy. He's going to help build you wealth. He's going to help protect your wealth. And he is going to secure your freedoms through the potential of being both a rich slave and optionality across borders, particularly outside of the Western nations. Till next time, I'll catch you later, guys. Thanks for watching and supporting. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.